ลำดับถัดไปนะคะจะเป็นการบรรยายถึงวัตถุประสงค์และหลักการของ ISSB Standard นะคะโดยคุณเจียหลินอาเลียนซือนะคะ Regulatory Affairs Manager จาก IFIS Foundation ที่จะเข้ามาบรรยายกับเราออนไลน์นะคะ Next session is regarding the objective and principle of ISSB Standard by Ms. Jialin Alien Su, Regulatory Affairs Manager of IFRS Foundation. Jialin, the floor is yours.
Thank you very much to SEC Thailand and ADB for inviting me to this event. It's both timely and crucial for discussing the latest developments in sustainability-related financial reporting in Thailand and around the world. I'm Alian Si, and I'm leading on the regulatory affairs work in Asia with a primary focus on supporting jurisdictions in adopting or otherwise using ISSB standards. Today, I will provide an overview of ISSB's developments and priorities and introduce some of the key principles underlying the ISSB standards. Okay, firstly, I would like to introduce the latest jurisdictional developments and ISSB's implementation priorities. So as you can see from the slide deck, there are already 36 jurisdictions that either on the journey, adoption or other use of ISSB standards. And with 20 of them have already finalized their decision on adoption or other use of ISSB standards, introducing ISSB standard into the regulatory framework, or 16 of them are still in progress of adopting or other use of ISSB standard. We can see 14 of those jurisdictions are actually from Asia. Also, we are very pleased to see that Thailand and SEC actually published the consultation on principle of Thailand Sustainability Disclosure Roadmap on ISSB. It's called ISSB Roadmap. That proposing that all provisions in ISSB standards will come into effect following the expiration of provided transition reliefs. So what we said is that we are making a truly global baseline. So from this slide deck, you can see that we are not only, the standard is not only designed for developed economies, actually the jurisdiction representing from all continents with different economic development status and also market maturity. Further later, I will introduce that why we are a global baseline and so many countries that are on the journey adopting our standards. So just a quick recap on what are the priorities, especially in relation to our technical work. As you know, that's supporting the implementation of IFRS S1 and IFRS S2 remains the highest priority. That is delivered through capacity building programs that we worked closely with, for example, policy banks, as well as IOSCO. We also deliver it through a platform called Transition Implementation Group, which is available on our website. That is a forum that all the stakeholders can provide the implementation related issues to that platform. So the experts there are available to look into those issues and come up with either the answers or look into further amendments of our standards. As you may be noticing that we are actually having a public consultation on the IFRS S2 climate-related disclosure targeted amendments at the moment. That is precisely because we received all those questions, implementation challenges through the TIG platform. So we encourage stakeholders to continue using that platform, especially like firms who are already implementing our standards. So we are also conducting our new research projects. We actually, from the market feedback and the due process, we've decided on two research projects, which is on biodiversity, ecosystem, and ecosystem services. Another one is human capital. We are working with different jurisdictions on how whether these are drawing on the interest of the market and what are the challenges and how it affects financial performance of the firms. And we are going to see whether we will make it into the further standards at the moment as well. So that is one thing that keep a lot of our technical work very busy. Another work is on the enhancing the ISSB standards. You know that one of the requirements in IFRS S1 under the South of Guidance is that we require entities to refer to and consider ISSB standards, because although ISSB standards is entity focused, but we require company to provide industry specific information where to raise the comparability. And the ISSB standard is one source of guidance that we require entity to refer to and consider on what kind of sustainability related risks and opportunities that are relevant to your industry, to your entity. And under that specific risk and opportunity, what is the information that is material to affect the investor's decision? So we are going to, as you know, that ISSB standard is published for many years. So we are trying to bring it up to speed to adapt to the market development, especially to adapt to the different market requirements. So at phase 1, we are looking at 9 industries that we wanted to enhance, including the matrix, including the topics. And we're also looking at phase 2 priority. We'll be looking at the industry enhancement to 6, which is the industry's classifications. We receive feedback around that, not all the market that fit to those industries classification. So as next step, that we are going to actually launch the consultation really soon. So this is relevant to all the jurisdictions, to the entities, as opportunity for you to further help us to shape the industry specific requirement that actually more aligned or tailored to your industry, that will make your regulatory requirements or to meet regulatory requirement easier going forward. So we are definitely giving a feedback period on like a 120-day common period, and we will take on board your suggestions. And we are also developing some educational materials in terms of how to understand ISSB standards. And in future, that will be our ISSB industry-based standards. So perhaps I will, for some audience who are not that familiar with us, I think today I will also talk about objectives and some key principles. I know our EY colleagues later on will provide more technical details to the entities, which is really, really useful. So for my side, I'd like to talk about the objective of IFRS S1 and IFRS S2. So you can see from our guidances standards very clear that the objective of the standard is to require an entity to disclose information about its sustainability related risks and opportunities that is useful to primary user of general purpose financial reports in making decisions relating to providing resources to the entities. So what does that mean? Is that when we talk about primary users, the primary users in our definition is existing and potential investors, lenders, and other creditors. So the standard here is not for entities to comply with another regulatory requirements in relation to ESG. It is really an opportunity for entities to use a common consensus language to communicate with the international investors. The objective is to be able to get resource. So what we are talking about sustainability here is really talking about surviving, talking about opportunities when we transit to the more sustainable world. So that is something that we would like to emphasize. This is not a compliance exercise for entities. This is an opportunity for entities to explain yourself, to the investors, what you foresee, what you think is the risk, and how you tackle that risk, and how you build that into your strategy going forward, and then identify the opportunity going forward. So you work with investors hand in hand to go to be able to make your financial position more sustainable in future for the long term. So it's about long-term value creation. So this is really about a mind changing for the entity to think in this way. So you take your own initiative proactively to wanted to do this long-term value creation for yourself. So in terms of what is the information that what we're talking about here, the standard requires an entity to disclose information about all sustainability related risks and opportunities that could reasonably be expected to affect the entity's cash flows, its access to finance, or cost of capital over short term, medium term, or long term. So the information that is useful to the investors, that is very entity-based. So we are not defining what is short-term, medium-term, or long-term. We are not defining what is the material information. The entity will need to look into this and use your judgment. And for the next slide, when you can see here, so what is risks and opportunities? So when you are looking into our standards, I know we received a lot of questions that what is the risks and opportunities that could reasonably be expected to affect a company's prospect? For example, if you are a company looking using ISSB Standard Navigator, and you look at what is related risk and opportunities. So basically, the risk opportunity we're talking about is the topic, is the theme, is what we're talking about. For example, climate, is biodiversity, is the human capital that we are talking about that relevant to your entity. And then under that specific topic, which is risk and opportunities, now what kind of information under that topic is material and you need to disclose, you need to let your investor understand to be able to make decision. And those information is material if omitting, misstating, or obscuring that information could reasonably be expected to influence primary users' decisions. So you think those are the ones that you need to let them know. However, that actually is reducing the burden of companies to exhaustive, like all the information under, for example, climate related topics. You only need to disclose that what is relevant, what is material to your industry, to your entity specifically. So that actually relieve company from disclosing a lot of data points. So we published last year, by the end of last year, we published the guide, especially on material information as an educational material. Is available on our websites. That I would highly recommend that entities to go to look into that. As a guidance on how you think about how you change your mindset of to use your own judgment to decide on what is material, what kind of thing you should be putting in this report. So what makes ISSB a truly global baseline? That is really what we built into the mechanism called proportionality mechanisms. So when the ISSB was developing our standards, we received the feedback from stakeholders that the ISSB standards should give more consideration to the range of capabilities and preparedness of companies around the world. So to make us a truly global baseline of sustainability-related financial disclosures, we built in these mechanisms to ensure that all companies around the world, including small companies and those in developing market, can apply them. So these proportionality mechanisms can support the application of IFRS S1 and IFRS S2. They help companies with different levels of capacities and preparedness to apply the ISSB standard. So So these mechanisms really address key challenges which company might face related to resource constraint, data availability, and specialist availability. And these mechanisms are not available for all requirements, unfortunately. They help companies to apply specific requirements in the ISSB standard that they might otherwise find challenging to apply. So there are two mechanisms included in the proportionality mechanism. One is use all reasonable and supportable information that is available at the reporting date without undue cost or effort. So this mechanism clarifies the information that a company is required to use in the preparation of its sustainability-related financial disclosures. In circumstances when this mechanism applies, it establishes parameters for the type of information to consider, means like what is reasonable and supportable information that is available at the reporting date for your company, and the effort requires to obtain such information without undue cost or effort. So it is a balance of judgment of company to say to what point it's not worth using this resource to disclose this information, right? It will cause too much cost. So that is a judgment for entity to really weigh to make decision. So the second one is commensurate with the skills and capabilities and resources that are available to the company. So this mechanism helps a company to apply specific requirements in a way that is proportionate to its circumstances. So this mechanism is applied in two ways to specific requirements, such that a company is required to use an approach that is commensurate with its circumstances, including the skills, capabilities, and the resources available to it in meeting a requirement, and or permitted to adjust the information to be provided when meeting a specific disclosure requirement if the company does not have the skill, capabilities, or resources to provide particular information. So this is particularly related to scenario analysis and anticipated financial effects when you are not able to provide quantitative information, that you are allowed to provide qualitative information, like to adapt to your capabilities. On scope 3, this is a very hot topic that also challenge that to a lot of companies. Without knowing a lot of details, we receive the most feedback that they are afraid that they cannot provide accurate information, where they will be having the legitimate troubles or issues for companies. So actually, in our standards, we are not saying that we require companies to provide accurate information, data, quantitative information on scope 3 disclosure. We said we require certain scope 3 information. However, we ask the company to shall prioritize the use of certain information. So two methods are used in our standards to quantify scope 3 greenhouse gas emission. One is direct measurements, another is estimation. So we allow company to use estimation to disclose scope 3 related information. Of course, we said with all else being equal, an entity shall prioritize direct measurement. So what is direct measurement? Direct measurement refers to the direct monitoring of GHG emissions, and in theory provides the most accurate evidence. However, it is of course expected that scope 3 greenhouse gas emission data will include estimation due to the challenges associated with direct measurement. So estimation of scope 3 GHG emissions involves in approximate calculations of data based on assumptions and appropriate input. entities that measure its scope 3 GHG emissions normally will have two types of inputs. One is activity data and one is emission factors. So for example, entity might use distance traveled as activity data to represent the transport of goods within its value chain. Emission data that can convert activity data then into the GHG emissions. So we are not having a particular requirement on which emission factors that you should be using. We said you should use the emission factor that best reflect your emissions in your location, in your industry. So even with activity data, we are actually having allowed two sets of data. One is primary data, one is secondary data. Primary data is that the data that is directly obtained from your specific activities within your entity value chain, and the data not obtained directly from entity activities of entities with value chains called secondary data. Or maybe you will use a combination of both, that we say you prioritize primary data, but if it's not valuable, you can also use secondary data. The same principle apply to whether you wanted to provide data more granular or less granular, depends on also the proportionality mechanism we introduce, right? You need to use your the information that commensurate with your skills and the capability. And we say you prioritize use verified data, but if you are not able to verify the data, depends on the quantitative information, and you can use not verified, but you just need to disclose this data are not verified. So this is the principle that we want entities to understand, and that there is the space that we give time for entities to be able to get started. But the key thing that the entity should start this journey as soon as you can. So that means we will have more and more direct data available in the market. Then that will over time improve the accuracy of the reporting. We're not asking for the accuracy because the purpose of this, again, objective of our standard is to be able to communicate with the investors that where is your transition related risks on your value chain over a period of time, rather than going to the technicalities. All the companies now thinking about how do I spend money on technologies, AI companies, to improve the data quality, rather than thinking about what is the transition risk over time that I need to reflect into the strategy planning. That is the key thing that the actually investors wanted to know. So that is a misunderstanding that I wanted to clarify here. So by the end of the day, the TCFD structure built in our standards is not only focused on the matrix and data, is that using that matrix data that reflect back to your strategy setting, back to your governance. And then that is something that investors wanted to know. So the next one is also, we also thinking about, yes, to begin with, there will be challenges. So we have in the beginning built in transition standard reliefs from specific requirements in S1 and S2 to facilitate the initial application of these standards. So these temporary reliefs are available to all entities, especially in the first year when they apply IFRS S1 and S2. The pace of growth in adopting ISSB standard will vary by jurisdictions. For example, we can see Thailand is putting a 5-year transition reliefs, and other jurisdictions might be different. So there's a different pace depending on the market maturity and the market development. However, to ensure the provision of globally comparable information for capital markets, it is recommended that phasing in is limited to only following transition standard reliefs: climate first reporting, the timing of reporting, the GHG protocol as the measurement, and scope 3 GHG emissions. So we are not able to carving out any of these requirements, but we provide transition relief. And in our jurisdictional guide, which is a very important document, equally important as our standards, also provided like extension of the transition reliefs, like 3 to 5 years or 1 to 3 years. That depends on jurisdictions' market readiness assessment. So I mentioned briefly earlier, conscious of time, that because we received the implementation challenges, we do consider that. One of the evidence we consider this is that we are currently consulting on IFRS S2 climate-related disclosure on amendments, especially on GHG emission disclosures. And we are providing further reliefs to existing requirements in IFRS S2 to be able to for entities to apply IFRS standards more easily. So the exposure draft will be open for comments for 60 days and closing on 27th of June. So please do looking on our website to look into the details. This is really useful and relevant to entities, especially those operating overseas, in different jurisdictions that might have a fragmented regulatory reporting landscape at the moment. So the proposed amendments are targeted towards providing reliefs to ease the application of requirements related to GHG emissions in S2. The amendments are focused on GHG, but doesn't mean it's reducing on disclosures about GHG emissions. It is about making it easier for companies to apply the standards when preparing the disclosure about the emissions, while still retaining the decision usefulness of information provided to investors. And indeed, throughout the process of developing the proposed amendments, we considered the perspectives of multiple stakeholder groups. So optionality is embedded in designing of the amendments. An entity can choose, of course, whether you want to apply the amendments without affecting its compliance, and a jurisdiction can choose whether to adopt the amendments without affecting its degree of alignment of S1 and S2. This is important because it means that disruption can be avoided altogether for those implementing the standards already. So this will only just make your life easier rather than contradicting on what you are trying to do. So the proposed amendments aim to provide application support for preparers and minimize any disruptions to jurisdictions. So there are 4 aspects in the amendments. So I will just do quickly, and please go to the details on our website, and so you can understand a bit more. So the first one is the measurement of disclosure of Scope 3, Category 15 greenhouse gas emissions, essentially the emissions related to financial activities. So we are now providing relief on those activity, emission disclosure only to finance emission, rather than derivatives or facilitated related disclosure. And the second one is the use of global industry classification system, known as GICS, for disaggregation of finance emission. That if you are familiar with S2, you know that we ask finance emission to be disaggregated using GICS. However, you know that GICS will apply a fee for companies that we don't want to add burden for companies. So we provide relief on that one. But that doesn't actually affect the company who's already using GICS, who you already paid for this service, that you can continue. So the third one is the existing jurisdictional relief that allows an entity to use a method other than GHG Greenhouse Gas Protocol corporate standard for measuring its GHG emissions. So long story short, it means that in S2 currently, we consider consolidated parent company for using the measurement. However, now we are also considering a part of a company, part of an entity which operates in a jurisdiction that require different measurement, then that you can comply with the local requirement without having complexities with navigating different, requirement. So the last one is the global warming potential values, excuse me, or known as GWP values. That is like you convert all GHG emissions into a CO2 equivalent. So we also provide further relief on that one. So just like to perhaps emphasize that we do encourage entities and jurisdictions to communicate with ISSB. So you can contact us. You can use TIG as the platform to address your implementation challenges. We do respond to those as evidence of that. And also do please pay attention to the public consultations, that going forward, it will be more and more relevant to the implementation to company. So do please provide that feedback to us. That is really helping you for us to understand what is happening in your jurisdiction, in emerging market, in entity, in your industry. So we will reflect that to our further standard setting. So that concludes my presentation, and thank you very much.
Thank you very much, Alien, for your session from IFRS Foundation. We have 2 questions for you total. First question, is it a requirement to follow SASB if the company discloses ESG issue based on GRI, TCFD after adopting ISSB S1 and S2? Do the company need to follow SASB guidelines, or we can still follow the GRI?
So a good question. Thank you. I understand that a lot of companies are already applying using GRI standards. So on industry specific, what we say, that sort of guidance that we refer to, we require company to refer to and consider SASB standards. But that is for you to provide more comparable information for your own industry. And then we also further said you could also refer to GRI standards when you disclose information under the industry topic. You can also refer to like GRI standards for specific like data point or information. Maybe you are required in your jurisdiction, you need to require. However, please note that SASB standard and also like TCFD recommendations, that was actually ISSB was built from TCFD standard, right? TCFD framework is no longer exists. That is all built into ISSB. However, TCFD, SASB, ISSB standards, what we said here is all investor focused. So we are providing information for investor to use those information to make decision. But GRI standard is serving for wider stakeholders, that may be, for example, public stakeholder and policymakers, and also the local requirements for ESG related requirement, right? We're familiar with that. However, in our standard, the difference is that we said additional information maybe from GRI standard, as long as you are not obscuring, clearly distinguishable from the investor related disclosure information, then that is okay, that we are taking a building block approach. So we are not saying that you can't refer to GRI standard, but on information related to investor related focus, that we require you to refer to SASB standard to begin with, to identify your risk and opportunity, and then to look into those metrics that provided by SASB standard. You need to consider, but you can say, okay, this is not applicable, and I do not use this metric under this specific topic, or it's irrelevant, that you can explain. So we said refer to is that you shall consider and refer to. We didn't say you have to use all of it. Hope that answered the question.
Okay, thank you. The next question is, the judgment used in the process of materiality assessment could mean that if the company thinks the information is not material and there's no regulatory requirement, no data requirement from other stakeholders, they do not have to disclosure. Just need to identify and internally document.
Yes, exactly. So that's why what we said, IFRS S1 and IFRS S2 has to be used together. So if you look into IFRS S1, there are conceptual foundation that we built there saying that you need to use judgment to make decisions on identifying, firstly, what is your sustainability-related risk and opportunities. For example, like I said, the topics, right? Like climate, biodiversity, human capital. Of course, human capital is a cross-industry topic, and also some specific maybe only relevant to your industry, but not relevant to that, right? So that is something the entity will need to make judgment on. Okay, what topic is related to me? Even within the industry, maybe not every company apply to all the topics, right? So that is a judgment you need to make based on your entity's status. And then once you decided on, okay, how many topics I'm going to disclose, and then under each one, for example, climate related disclosure, and then you need to look into what are the recommended matrix, for example, in the ISSB standard. That is the action we require a company to do. You need to at least look into those matrix. Of course, for S2, you don't have to, because all those matrix from ISSB has been built into ISSB climate-related disclosures application guidance. That is already in our S2. But for other topics at the moment, because we don't have a S3, S4 yet, you still need to refer to S3. ISSB standard for matrix, right? So I need to clarify that. So then you need to refer to matrix available in ISSB standards or S2 standards, and then decide on, because that might be thousands of matrix for S2. For climate-related disclosure. You don't have to disclose all of it. It's not mandatory requirement for that. But you need to then pick and choose what is relevant to you, what is material, what is the investors that are asking for in the past 10 years, and it will be in the next short term, medium term, and long term. Then you don't need to, for those irrelevant, you don't need to disclose. I think that is the principle we are talking about. So judgment is very important. That's why this is like what I said, is a mind changing. The regulators will not be able to tell you what are the exact matrix, as far as I know. But then if you apply ISSB standard, it will be a principle-based approach that allows companies to use judgment to decide on what kind of matrix that they need to disclose, what kind of information that is material. So that might be easier for company, but I understand that also be a challenge for company, because that means the whole mindset is changing. It's not a compliance, ticking box exercise anymore. So hopefully I explained that clearly. Thank you.
Thank you very much. That's very enlightening. We have another question just came in. Just want to ask you one more question. Could you please confirm whether we may report our organization's GHG emission using the Thailand Greenhouse Gas Management Organization, or the TGO methodology and factor, or are we required to follow the GHG protocol exclusively?
So in terms of the regulation in Thailand, I'm afraid that we will have to refer to the SEC Thailand, and also we understand that there's still proposed stage, right, for the consultation, that SEC colleagues are busy looking into those feedback, and then perhaps before publishing the roadmap, and then will be further consultation. So I think that that is something we will need to refer to the local regulators. Yeah, on that one. Thank you.